BP reporting a drop of nearly 70% in its second quarter profit thanks to weaker fossil fuel prices. But the company boosted its dividend by 10% and said it would repurchase $1.5 billion of its shares over the next 3 months. I want to bring in BP's CEO, Bernard Looney. We welcome to the broadcast. Good morning to you.
Morning, Andrew. How are you?
I'm good. It's a bit of a different world and a different picture. The last time I think we spoke, we were talking about windfall tax profits, if you remember at the time. The world in energy switches fast. It's an interesting thing to see both the change in prices, what it means to profits, but also how you're trying to balance it on the dividend and repurchase side.
Very good. Well, it was a good quarter, Andrew. Overall, we grew oil and gas production 3%. We drove our production costs down by 9%, and we grew other parts of the business as well. We grew our biofuels production by 10%. We almost tripled our power into our EV charging network. We grew our convenience business 7%. So a lot of growth in the first half of the year, and it's resulted in the announcements that you've seen today from the board. It gives us the confidence to announce a $1.5 billion buyback, which is good following our 60% of surplus cash goes to buybacks. And also, over the last 4 quarters, Andrew, we bought back 9% of the company's shares. So we actually announced a 10% dividend rise, as you had said. So it's all about confidence in the outlook. The business is performing well, and they're the reasons for the decisions that we've taken.
Bernard, when you talk about that share buyback, so you increase the dividend by 10%, but you're paying out the same amount, which is a good way for you to kind of control the capital?
Yeah, that's right, Becky, and hi to you. And we've bought back about 15% of our shares since we started this program, I guess, about 21 months ago. So as we look back over the last 4 quarters, 10% retired allows us to increase the dividend by 10% and maintain the absolute burden flat. So it's a good way to manage and return profits to our shareholders. The same through buybacks. We're returning 60% of cash flow to dividend to our shareholders through buybacks, and hence the $1.5 billion this quarter.
Help us with something that you've probably seen the critique or criticism, and it's not just of BP, it's true of Shell and so many other oil companies around a number of the pledges made on carbon emissions and the like, and some of the transition work that I think you and a number of the other oil companies have been on, and what appears to be a scale back. Do you think that's fair?
Well, we're not scaling back. If anything, we're propelling forward. Let me just say, Andrew, that our strategy is very simply defined by the phrase "and, not or." We believe we must invest in today's system, which is an oil and gas system. And in February, we announced we'd put $8 billion more into that system. And we grew that business, oil and gas production, 3% in the first half. At the same time, not or, we're also investing in accelerating the energy transition. And as evidence of that, in 2019, we spent 3% of our capital outside of oil and gas. 3 years later, in 22, that number was up to 30%, 3% to 30% in 3 years. So we are leaning in. In February, we said we put $8 billion more also into the energy transition. So it's an and strategy, not an or strategy. We're investing in oil and gas, and we're investing in accelerating the transition. But we believe that's what the world needs. We believe that's what's good for our shareholders.
Unfair then, and tell me if this is wrong. My understanding was that there was an original pledge on emissions that would be cut by 35 to 40%, or have them 35 to 40% lower by the end of the decade. That would be 2030. But that in February, you had switched that target to 20 to 30%.
So the actual numbers in question, we said we would reduce our production by 40% as a result of all of the concerns around energy security in the world, in every government in the world, pretty much where we work, wanting to ensure that it's got security of supply. We updated that number to 25% rather than 40%. So that is true. At the same time as doing that, we said we'd put $8 billion more into hydrocarbons, including a lot of it in the United States. We grew production in our onshore U.S. business by 9% in the first half. We brought on Mad Dog Phase 2. We've got 4 wells producing 70,000 barrels a day. That project's going very, very well. And at the same time, we said we'd put $8 billion into the transition in addition to what we're already doing. So that's the nexus of what we...
I'm going to blow your mind with my next question. I think that you're going to be surprised that I'm going to say what I'm about to say. I was having a conversation with an energy executive last week who may have convinced me of something. You will probably even disagree with what he said. And he said, Andrew, maybe this whole thing has been a mistake. This idea of pushing energy companies to try to either reduce the amount that they're going to be emitting. Clearly, what you can do on carbon capture is important, but the idea that they are going to be the ones investing in all of this new technology, shouldn't it be governments and venture capital firms and others that can take lots of risk, that have a different sort of profile and appetite for long-term risk? Shouldn't they be the ones investing in clean tech and other types of things? And effectively, the energy companies should be the energy companies, lean into being an energy company, and that we've somehow mixed the message so much. And in fact, this person was comparing it to the pharmaceutical industry. For a long time, pharmaceutical industry did a lot of R&D. But what's really switched over the years is pharmaceutical companies today, they effectively market drugs and have salespeople for drugs. But we now have a thriving venture capital community that supports a lot of R&D that builds some of these new drugs and developments. And then when they get to maturity, the pharmaceutical company buys it. I thought that was a sort of a fascinating way to think about all of this.
Well, look, let me tell you what we believe and what I believe here at BP, and that is that the world needs a rapid energy transition. I think that is true. And at the same time, that transition needs to be orderly. By orderly, it means that we need to match the supply of today's energy with the demand for today's energy. And we saw last year what happens, Andrew, when we get a mismatch of supply and demand. We lost 3% of the world's gas supply and prices went up sevenfold. Not 7%, not 70%, 700%. And what happens when prices rise? Countries turn to coal to fuel their economies, as we saw in Germany and South Korea and Japan, China, India. And also governments spend more as a percentage of GDP on energy. So we must make sure the transition is orderly, which means we invest in today's system. As to the transition, we're investing in growth businesses in the transition where we have things and skills and capabilities to